You're welcome to Weldds Asset Limited. In this section, we break down the market using the best institutional framework and give you trade ideas. There is no hype, no trading lifestyle. We focus on real trading. And if you have been watching our previous videos, you will see that most of the trade ideas we share on this channel, they keep on exploding in profit because we have a balanced approach to trading. And in this video today, I am going to look at the Weldds Macro Terminal, the best macroeconomic analytic software that's available to retail traders all over the world. And using the Weldds Macro Terminal, I am going to analyze the market and show you the best trade setups that you can take. If you are new to the channel, my name is David Wekulom from Weldds Asset Limited, and I am the person who created the Weldds Terminal. I encourage you to watch this video from beginning to the end and see what you can benefit from it. Looking at the Weldds Macro Terminal, there are different areas. The first area is the currency strength trend history. This is telling you about what is happening in the market right now. And merely looking at the chart, you can see here that the US dollar is pushing this morning. Australian dollar is pushing as well. Euro, among other currency pairs, they are hot, okay? But when you come down here, you see the currency strength. The US dollar is still the strongest, seconded by the British pound and the Australian dollar. If you check the bottom three, you still have Japanese yen, Swiss franc, and New Zealand dollar. They are still there. The top recommended trades, you are seeing USDJPY for a buy, USDCHF, NZD, JPY, AUDJPY. But to make the video very brief, I am going to concentrate on AUDJPY and USDJPY and probably the pound against Japanese yen. If you have not yet subscribed to the channel, quickly click the subscribe button and be a part of the community. So quickly, let's check. Now, this is AUDJPY, and I told you that the AUDJPY is going to be doing more than 1,000 pip in the coming days, weeks, and months. Okay, now let's begin this analysis. If you look at the weekly time frame, this is something I showed you in my last video if you watched it. On the weekly time frame, AUDJPY has broken a solid resistance zone. It actually closed with a full body candle, and when that happened, I told you that you should expect this currency pair to push for more than 1,000 pip. And if you can take your ruler and measure from this point up to this level, you are seeing up to 1,300 and something pip. And this is very achievable. If you follow the history of how we have been trading, we started trading from right here, some of the trades we took, okay, and you can see the number of weeks that we kept on trading. Right now is another opportunity, okay? So having said that, if you come to the daily time frame, you will see what just happened, and this is a clear trade I should not miss, especially as a swing trader. In this channel, we do not do day trading. So the market broke out of this place, retested, and is continuing. Okay, so now you have another opportunity to join the trade even right now. So for us, you know, we stop our analysis at the 4-hour time frame because I believe that if you go beyond the 4 hours, you're actually going into noise. So this morning, what I did was I used Fibonacci retracement from this level to that high. The trade was executed as the 61.8 Fibonacci level, but it is still available that you can still join the trade. You can join this trade by instant execution where it is, or if you come later and the trade has already moved, you should go to a lower time frame to wait for a retracement and then you join the trade. But assuming you are taking this trade right now at 109.378, you come to the terminal and we have the best calculator here, which is volatility based calculator. The entry point I told you is 109.367. So you select 109.367. That is your entry point if you are taking instant execution, assuming that you see this video on time. So your stop loss will be around 108.47. 108.47. So this is the level that your stop loss should be. Then you can target at least 2 times of your stop loss. But what I normally do is that from the entry point, when it hits this first resistance level, I'm going to close 50% of my positions. Then I'll keep on trailing my stop loss for the rest until it keep on going. The final position, I will not exit it. I will be adding to the positions whenever it breaks and retests. Okay, so but first of all, you are going to secure 50% of your profit when it hits that resistance level. So that is trade number one. If this place is your stop loss, your take profit one is around 2 times of your stop loss, then you can even keep the other one for even a take profit level of more than 5 times. So that's AUDJPY is clearly a buy because the Weldds Terminal clearly tells us that this currency is buying, and you are seeing the position of AUD and then the position of Japanese yen. Let's look at USDJPY. This USDJPY trade, I've already executed. Yesterday was NFP, and the NFP actually favored the US dollar, okay, because the market before NFP was consolidating badly. So if you look at AUDJPY, this was the area I took this trade this morning, and I'm going to show you why I did that. In my last video, we were around this zone, and I told you that you should expect it to trade back to this trend line. I traced this trend line from this point. It came here, tested it, and here. But for USDJPY, I have been expecting it to break above this level, because once it breaks above this level, then it's going to set for a very long-term movement. Okay, but for now, when it came close to this place, I came to the lower time frame, which is the daily time frame, and you can see what is happening there. The market is actually pushing this morning. But if you go to the 4-hour time frame, why did I execute this trade? Normally, I should wait for it to come here, but that first position I have taken is a starter position. And the reason I took it as a starter position, because I believe that this trade might come back here anytime, and if that happens, I am still fine. My stop loss is based on volatility. One of the reasons that actually informed my decision to execute the trade, look at this low. The market came close to this low. It could not break below that level. It did not even reach exactly at this low, and it started pushing back. Sometimes if I am refining my entry, I might go to a lower time frame. So if you come to the 15 minutes time frame, you can see what happened there. Okay, for the 15 minutes time frame, you can see that this market was trending down, and this was a clear kind of corrective movement. So it came here, went up and dropped to this low, then pushed back. This movement did not come to that level, and it started pushing. So this place became like a head and shoulder pattern. Okay, although it is on 15 minutes time frame, which is prone to a lot of noise, but I could see clearly that there is a sign of change of direction. Okay, but the possibility is still there that this can still push back, and then before that final movement. Okay, but I've already taken a starter position around this zone. The distance to the take profit far outweighs the distance to the stop loss. So that is for US dollar Japanese yen. If you are going to be executing the USDJPY where it is right now, what you can do is this. You can execute it at the current level, 153.501, and then we are risking 2% on a $1,000 account. If your account size is $10,000, you should calculate you are going to use 0.27. If your account size is $100,000, you will be using 2.75 lot size. Okay, so the lot size is based on your account size, but for the average number of people that are following the trade, their account size is around $1,000. So for $1,000, if you calculate, you should not use more than 0.03 on this trade. Okay, so your stop loss is around 152.70. Then you have your take profit 1, take profit 2, and take profit 3. So even at take profit 1, you are already targeting 1.5 times of your stop loss. And once the market hits your take profit 1, you move your stop loss to break even and keep on riding the remaining positions risk free. I want you to know that we are still accepting people into our account management service. If you have up to $1,000, $10,000, $20,000, any amount of money from $1,000 and above, and you want us to execute trades for you, we can actually do that and share in the profit. You are not funding the account with us. You are not sending us any money. You fund it with any broker of your choice, and we trade on your behalf. Okay, so if you want to discuss with us, you can check the pinned comment or the description of this video for our WhatsApp link and our WhatsApp number. Chat us directly. Make sure that you're chatting from the pinned comment or the description of the video, and if you check any other place, you might be chatting the wrong persons. Also, the Weldds Forex Academy is available if you have been trading and you're not stable and you're looking for a way to build consistency in your trading and you want to join the Weldds Forex Academy. You can also chat us today. We are giving it at $100 US. You have an opportunity to join the Weldds Forex Academy. Even as a total beginner, the course is beginner friendly. So let's look at pound against Japanese yen. I like trading the Japanese yen pairs. One of my reasons is that anytime I get a valid entry, they used to move very fast and I get a risk to reward ratio of minimum of 3 times most of the time. This is the pound against Japanese yen. If you come to the weekly time frame to look at this analysis, you can see what has been happening here. This market was trading for some time, then it broke this resistance level and kept on trading. Then it has not yet retraced to come back to this level. If you come to the daily time frame, you will see something like this. The market came to this area, it did not break out of that area. So this was a signal that it was beginning to retrace. If you look at this trend line, the market moved from here, dropped. This was one of the areas where we started trading. It went up there, came back, and then we continued. The Weldds Macro Terminal has kept on signaling that we should buy the British pound against Japanese yen. It was even the second trade, but it dropped. Okay, as the market began to react here, it actually dropped. What happened is that last week, the market came there, it was ranging and broke out of this place. So technically, what this particular currency, the reason I'm not very confident about this currency pair is that there is a sign that it might retrace back and come to this level. So what this movement might be, it can do this and keep on trading back to this level. That is a possibility. But ordinarily, looking at what is happening across all Japanese yen pairs at this zone, okay, it actually balanced here and you can actually take a buy position, but there is a tendency that this thing can drop to any time. Okay, but we will be watching. If you come to the 4-hour time frame, you can see what I am telling you. So this particular movement right now, it can actually do this. If you look at from this top down to the bottom, can actually trade towards this area and start retracing. There is a possibility there, or it can go into a long time range. Okay, so if you're trading, observe what the market is doing and make sure you are trading with proper risk management. The market can actually push to the 61.8 Fibonacci level. So if you're buying from here, you should aim to take some of your profit away from here. If you look at NZDJPY, New Zealand dollar against Japanese yen, this currency pair is another nice one. Okay, because from here it is trading. If you use your Fibonacci retracement from this level and go there, you will see that the market came to the 61.8 Fibonacci level and it is retracing. Okay, so since it has already broken this level and retested, the next level that is going to move to is here. Always trade the currency pairs that give you clarity. Any currency that is confusing, I encourage you to stay away from it. For now, New Zealand dollar USD has broken out, retested, so it can move. And if you calculate the distance from this level up to that point, that's around 600 pip. Pick one or two of the best trades and trade them. If you come to daily time frame, you will see that it aligned favorably. If you have enough money in your trading account, you can actually take this trade from here and aim for that level. So it can actually go very well. Your stop loss can just be below this level, and that is a very nice setup that you can even take right now. Okay, if you have not yet subscribed to the channel, quickly click on the subscribe button and be a part of the community. Like the video and drop a comment to encourage other people to watch it. All right, see you in the next video.